Thank you so much for joining me today, Kolade.
Thanks for having me, Peter.
All right. I mean, just saying, I don't think I'm at that point where I expect so much from the NNPCL, though many have said the new leadership should be given a chance. But for you, how expectant are you about the swift coming on stream of the new Port Harcourt Refinery?
All right, thanks. And I must share in your sentiments, right? Because the NNPCL has disappointed us time and again, even when we had timelines, and it got to a point where it was more like, you know what, if you have any questions, meet our contractors and ask them. And the contractors then said, you know what, we don't have the Freedom of Information Act impacting on our business, so we don't have a duty to respond to you to the extent that they just do not want to begin to have these conversations with people. So it begins to put a question mark on the sincerity and the transparency of the sort of refurbishment and revamping that is being done to those refinery. But again, I would still express some cautious optimism. I'm not holding my breath just yet for the NNPC, but when you talk about sweetness, it means different things to different people. If you think about what's happening, the hopes of privatization, the removal of subsidy, the competitive pressure coming from Dangote Refinery, for instance, and of course the pressure from the likes of PETROAN, would expect that going forward, we might also have something happening differently, especially because, like you said, we have a new management of NNPCL.
I mean, part of the last report we saw from NMDPRA, the Warri Refinery and Petrochemical Company has been shut down since January 2025, actually. That was less than a month after it went live. And that the old Port Harcourt Refinery has been operating at less than 40%. That does not instill hope, does it? I mean, what are the issues we're dealing with here?
Yeah, again, you know that sometimes there is the need for the government to also express some maybe some sort of show to demonstrate some readiness and maybe to match some political milestones that may not necessarily translate to the commercial viability of those ventures. And one thing is for us to also have some mechanical completion and without necessarily having sustainable operational performance. So those issues are there. There've been concerns about the recency of the sort of equipment that we have in some of these refineries in the past, and I'm not sure that so much has changed. These are issues that have to do with systemic failings, decades of underinvestment within the sector, and of course in the refineries themselves. There have been concerns as to, do we want to sell them? Do we want to keep them? Do we want to refurbish them? There's been political interference from time to time, and of course, lack of commercial discipline. So if you're going to find anything happen differently, there has to be reforms in governance systems. We've got to have renewed supply chain management, and of course, the operational culture has to change. The maintenance culture has to change. So those issues are there. And it's important for the government to say, what do we want? We just want to mark a political milestone and show to people, cut the ribbons and say we're doing things without necessarily getting things happen on the ground fiscally.
Right. Let me just put this to you before we go on this very short break. Which is more important to you, a sacrosanct timeline or successful eventual completion at optimal capacity with minimal challenges? Because, I mean, we're having challenges with the Warri Refinery now. Or you want both?
Oh, thank you. Thank you very much for that. Definitely, I want both. Sacrosanct timelines without quality means nothing. But again, we must also emphasize that there is a cost to every delay. The cost to our economy, the cost to the social environment. But of course, we must then manage that optimism and that sense of urgency such that what we then have is a balanced urgency. So we must ensure that there has to be that balance between sustainability, quality, and of course, let's not just mark headlines, oh, it's now producing, but then whatever we want, we need timelines so that we can hold people to, to some commitment as well, to ensure that it's not just a case of any time it comes, it comes. There is a time it comes and then it doesn't serve anybody anymore.
All right, thank you. We're going to a very short commercial break, and when we come back, we'll continue the conversation. Stay with us. You're watching Business Edge. Temitope Kolade, Associate Director, Oil, Gas and Power, Andersen Nigeria, is right here with me, and we are talking about PETROAN's demand from NNPC. Thank you so much for staying with me, Kolade.
Yeah, thanks for having me.
Well, while we have seen some improvements in oil production in the country, we know that more must be done. And beyond crude production, it's just 1.68 million barrels per day to start with. Refining and adding value is even more important. So what are the implications of the continued delay in ramping up production and refining capacity in Nigeria at this time?
Yeah, Perpetua, you're absolutely right. Increased oil production is only a part of the puzzle, right? So without having refining and, of course, the value addition that brings, would be very trapped in the same extractive export cycle that has limited our economic resilience for as long as we started producing oil in the country, right? Would continue to have issues with employment and underemployment. Even energy security will continue to be a challenge. And importantly, we must also be worried about issues around foreign exchange. Currently, we have the price of crude per barrel dipping, and we may have expected that would, be leading us to some gains in terms of the pressure on the price for refined products, because we don't produce locally, because we have issues with our foreign exchange, because our foreign exchange reserve is low, and oil production being the mainstay is also an issue for us. So it would mean that we'll continue to depend for fuel imports for as long as Dangote is not able to meet all the needs. So we've got to balance that other part of the equation, right? There'll be so much pressure on the fiscal space as well, and so the real transformation that we need for the oil sector in Nigeria requires that value addition that comes through refining, so that we can really say that, yes, we are in charge of our energy security as a country.
Well, you mentioned something I feel I should just, point out, which is Dangote probably not meeting our need and all of that. But how sure are we about that? Because Dangote keeps saying, I have what it takes, I can meet the need. So, where are we on that?
Well, when we look at the numbers, right, and we look at the reality that we are met with, the question would be, where do we get our oil from today? Do stakeholders that still have to import? And if the answer is yes, where does the import go to? Right, that would be the other question. So, to the extent that we have some imports still happening today, the natural thing would be that the market forces would ensure that Dangote is not even able to, those imports will not make any sense to any buyer within the market. If indeed he's got the ability to meet the needs of every Nigerian, right? The prices will be such that everyone will be forced to buy from him. So if we don't see that, then we can't hold our breath just yet for that commitment that is able to meet our needs. If today there are people who still import into the country and they find market for the imports.
Absolutely. I like the way you put it. If people still import and they find markets for the import, then that means there is a need somewhere that needs to be met. All right, away from that, you said something about our reserves. I feel that the CBN governor may not agree with you, because just yesterday he was talking about how we have 7.5 months cover of imports. Or you feel that's not good enough at this point in time? That's talking about foreign reserves.
Well, if you talk about growth, the sort of difference that we need in terms of recovery is that the reserves today, they are not just enough. If you think about it, oil production is still below the potential and even the budgeted levels. And so Just about 2 weeks ago, we're talking about the challenges and the fact that the Minister of Finance is now having conversations again to review the budget for the year. And it's coming from the dip in oil price globally, right? So Nigeria is producing, say, circa 1.5 million barrels per day as we speak, and is well below the quota from OPEC. There are conversations at the level of OPEC. There are budget assumptions that we're not meeting up with. External reserves are still very thin. And what that means is that there is a problem with the potentials for repaying the euro bonds. There are FX backlogs, and so it's already impacting on our FX position as well, the foreign exchange position. And so how do we sustain that if we indeed think that we're producing well enough? We are not just there yet. And so going forward, we've got to ensure that we ramp up oil production to save our FX situation. There is the need to stabilize refining and reduce the imports level. And of course, there is a need to even diversify what we're exporting altogether. Can we look at what's happening within our digital space, agriculture space, and the services? Can we rein in our fiscal leakages and ensure that in terms of debt, we manage our debts better? So there is a lot for the government to do to ensure that we get to where we really want to. And then, of course, the people on the street, common Nigerians, will begin to feel the pulse of a change in the economic situation and fortunes of the country.
All right. I mean, you mentioned something I think is very important, talking about deficit. And we know that, despite the signs of recovery, mostly on paper with limited transmission, there is a risk of renewed exchange rate volatility, and that's due to concerns over lower oil revenues and also the need to preserve foreign reserves. This could definitely, not even could, this will widen fiscal deficits, because if we're talking about checking the assumptions again, it means we want to review certain things either upward or downward. We probably want to start from our $75, which we pegged the oil at. Maybe we want to review that. And some of the things that we may even need to review. And this definitely will boil down to, increasing government borrowing. How do we cushion this effect when it comes to fore?
Well, I think that likely what the country has to do, and the federal government in particular, would be to ensure that there is a clear strategy and, of course, willpower to demonstrate that we're going somewhere, right? And, of course, all of that needs to be communicated to every stakeholder so that there is a buy-in, and so we can begin to have the right sort of investment into the country. I think that we should do away with the sort of management that is done by some sort of portfolio investment that come into the country and don't turn to real assets and real activity and impacts on the lives of common Nigerians. Again, fiscal deficit and borrowing is still quite high, and of course, debt servicing is then crowding out our capital expenditure. How much can we continue to develop our infrastructure so that we have a good environment for business? Government borrowing from the domestic market is also very high, and that's driving up interest rates. You mentioned at the beginning that, of course, the MPR has been retained at 27.5%. That's quite high for small businesses to thrive in the country. So there are a couple of things to do from the point of having clear strategy that will tackle the fiscal challenges and, of course, the monetary challenges in the nation. And more importantly, we must ensure that we don't miss out on the oil windfalls. Today, there are issues at the international stage. We don't control the price of crude per barrel across the world. And so we don't know where it's going. If the sort of trade war that we're seeing a couple of weeks ago and has continued, will continue into the foreseeable future, it doesn't mean well, or it doesn't translate to an healthy economic environment for Nigeria. So there is a need to ensure that we do what we need to do very quickly and ensure that we create some sort of sovereign wealth buffers to ensure that we are not just exposed to all of the changes happening from different places that we don't have control over in the country.
Well, talking about inflation, I mean, I spoke to some economists yesterday and they said the CBN is doing what it has to do. So it's just the fiscal authority will probably needs to begin to do more in terms of infrastructure, electricity, and, some other things like that. But before I let you go, since you talked about it, do you think the fiscal authority is doing enough, whether to address inflation or anything at all in that regard? Also looking at the tax reform bills, how hopeful are you that that is going to, move a needle when it's being implemented?
Well, I see that some of these changes don't happen overnight. I'm aware that, for instance, we have the tax reform bills that are currently under review, and maybe soon they would be passed. And what we have heard from the committee in charge of that particular bill is that some simulations have been done, but again, we never know until these things become live, right? But the expectation is that it would kind of shake up the fiscal space in Nigeria, and we begin to see real investment. But more importantly, we must ensure that the flow of money is not disrupted and investors can bring in their money and take them easily, and we have some sort of stable foreign exchange rate. And so all of these issues are interwoven. We can't take a side and say, oh, we've done our bit and it's now left for the fiscal authorities to do. There has to be a clear handshake between the two parties, those responsible for the monetary policies and the fiscal policies, such that we are aiming at the same goal and we don't have people who are saboteurs and basically just turning the system around for their own personal gains.
Just maybe the fiscal authority also needs to engage the people more, just the way we see the CBN engage, especially during the during the NPC rather. Well, thank you so much, Temitope Kolade, Associate Director, Oil, Gas and Power, Andersen Nigeria, for your time and thoughts on Business Edge today.